Man, that is such a disgusting chart. What is up, everybody? Welcome to Trades Trades, where we get technical analysis on different stocks in the stock market, as well as potential buy, hold, or sell opinions on these given stocks. I like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. Today, we are going to be giving you guys an analysis on ticker symbol OCGN, Ocugen Incorporated. This is a stock that I've covered here on the channel in the past. It has been quite some time since I did. It would have been back on, I think it would have been December 31st. I saw that the article come out about the COVID vaccine for India, which is the second most populous country in the world, I think first by capita. And we had a pretty good run-up on that. And over at the Discord, we had some people that absolutely crushed this stock. And I don't think that it is completely over. I think there is still potential here for the stock. But I want to present you guys the best possible way that you guys can play this without getting burned, without getting crushed, so that you can turn a nice, filthy profit on OCGN and how you can play it off. So we're going to start off by telling you the fundamentals of the company, the why should you invest in them, what I think actually the long-term potential of the company could be, right, based on the fundamentals, based on the news that is available to us, right, and then we're going to get into, some recent news articles, we're going to look at the overall financials, and then get into the meat and potatoes, which is the chart setup, right. We're going to look at the 1 month chart as well as the 1 day, 1 minute chart to give both a macroscopic and microscopic perspective of the price action. I'm going to have a couple different indicators pulled up here, the RSI, which is the relative strength index down here. Anything over 70 is overbought. Anything under 30 is oversold. This is typically a indicator that shows momentum for bulls and bears. Typically, when there's a lot of bullish momentum, it is overbought, it is overvalued, and vice versa. And then I've got the 200 EMA, which is this purple trend line, and the 15-day MA, which is this blue trend line. The 200 EMA is the exponential moving average. This is a price action-based valuation trend line over a 200-day moving period. And then we've got the 15 MA, which is a moving average. This is, some brokerage accounts call this the SMA, the simple moving average. They're one and the same. This is a price action-based valuation trend line over a 15-day moving period. And we use these side by side so we can get both a macroscopic and microscopic perspective of price action, because if you have a breakaway from the 200 EMA with this microscopic trend line, the 15 MA, right, it typically indicates an upcoming bullish run. And if you were able to get into this back when that first happened, my friends, oh my God, you'd be crushing right now, because that's disgusting. Anywho, we've got a lot to talk about. Let's get right into the video. So what do these guys do? Ocugen Incorporated, formerly Histogenics Corporation, is a clinical stage biopharmaceutical company focused on discovering, developing, and commercializing a pipeline of therapies for eye diseases. The company offers a diversified ophthalmology portfolio that includes gene therapies, biologics, and small molecules, and targets a range of retinal and ocular surface diseases. The company is leveraging its modifier gene therapy platform to address genetically diverse inherited rational disorders and dry age-related macular degeneration, based on nuclear hormone receptor genes and RORA, respectively. The company is also developing biologic therapies for wet AMD, diabetic macular edema, and diabetic these biopharmaceutical companies screw me. Diabetic retinopathy, as well as for retinitis pigmentosa. We're going to pull up their website here really quick just to take a peek at what these guys do, what they look like. So primarily they're focused on the retina, the eye, right? Our mission is to develop gene therapies to cure blindness diseases and develop a vaccine to fight COVID-19. It is not because of the gene therapies and the blindness diseases, although that is a good, important factor, right? That is an important thing. But why they've been running so much is because of this vaccine to fight COVID-19. So, just take a quick peek here. Innovation in eye therapeutics. This has some long-term potential, right? This is something that could be good. They're competing against a wide market, but nonetheless, it is an important market. Ocugen is a biopharmaceutical company focused on discovering, developing, and commercializing transformative therapies to treat blindness diseases. Our breakthrough modifier gene therapy platform has the potential to treat multiple retinal diseases with one drug, one to many. And our novel biologic product candidate aims to offer better therapy to patients with underserved diseases such as wet age-related macular degeneration, diabetic macular edema, and diabetic retinopathy. So, this is very interesting. Our breakthrough modifier gene therapy platform has the potential to treat multiple retinal diseases with one drug, one to many. That's something I've never seen before. That's very, very niche. That's very unique. Being able to treat many different retina-based diseases or problems with the eye, right, and treat that with one drug is something I've never seen in the market, right? I used to have a pretty bad, retinal problem. I had something called bilateral anterior uveitis, which is basically really strong inflammation in both of my eyes, right, pressing against my optic nerve, which would cause blindness, right? I had really, really bad vision, extreme light sensitivity, etc. And this would have been awesome. This would have been awesome just to be able to use maybe one eye drop or one treatment in order to take care of that. So very interesting. They're on preclinical trials of OCU 400. Their OCU 410 is also preclinical, and their OCU 200 is preclinical. So they are kind of, maybe they're done with the preclinical here on the OCU 400, but these down the road could be big game changers for the company, right? So all the run-up we've seen so far has just been with that COVID vaccine. Nobody's really talking about this, right? The treatment of inherited retinal disorders, the treatment of dry age-related macular degeneration, treatment of neovascular disorders, right? This is stuff that down the road could be pretty solid. And I'm not talking like tomorrow, a month, a couple months. This might take some time. It might take some years, right? Because they're on preclinical on this one. They're on preclinical on this one, right? They just finished preclinical trials on the OCU 400. So down the road, right, we could be looking at two really big 1-2 combo punches. The COVID vaccines are going to stick around for a while, but that's like a midterm play, right? You're looking at maybe 6 months to a year and a half at most, depending on where you're going, right? And what's interesting and what has really driven the price up here is a couple of things. So I'm going to show you a news article that came out. I've actually already got it pulled up, and it is this. So this was posted yesterday, February 8th at 2:53 p.m. EST, and it says, wait to buy Ocugen stock on the next dip. I'm just going to read you why it ran up, right? So Ocugen provided additional details on February 2nd about its partnership with Indian vaccine developer Bharat Biotech. The two companies are co-developing Covaxin, Bharat Biotech's COVID-19 vaccine, for the U.S. market. As it sits right now, the U.S. market uses the Pfizer vaccine and the Moderna. These are the two utilizable COVID vaccine vaccinations we have available. So to have a third one is interesting, right? We already have that market, right? But if it has, upside potentials, right? Maybe less risk. Maybe you only have to take one vaccination instead of two. I know that you typically have to take two vaccinations with the Moderna and the Pfizer. So there's different upsides here. OCGN stock jumped 80% on the news. Absolutely filthy. That's nasty. More gains were had on February 5th when OCGN stock gained 62% on the day. However, it was the news on February 7th that the company had sold 3 million shares to institutional investors at $7.65 a share, which put its stock on a collision course with the moon. In pre-market February 8th trading, Ocugen's shares gained more than 60% on this news, up 214% as I write this midday. The possibility of buying its shares for less than $2, where it traded before February 2nd details, is looking next to impossible. Last week, I had been planning to write a column about the little dip Ocugen stock took after its February 2nd announcement. Its share price fell 14% on February 3rd to close at $2.81, and whether investors should buy on the slight dip or wait to buy it below $2. By the time I got around to it, Friday and Monday's action made that argument irrelevant. Anyways, he's saying that people should take some time to buy into OCGN. I'm not going to recommend against or for that, right? But what we can do is look at their overall, charts and the financial situation. Not a lot of gross profit yet, right? They don't have any gross profit in the previous 1, 2, 3, 4, 5 years or so. So that doesn't tell us much. But what we can see is there's a lot of investor sentiment towards this stock. A lot of volume. It picked up a lot. It went insane. It went absolutely crazy. Guys, when I was talking about this stock on my Discord, I said, be very careful buying into this. It's already run up 60%. They had a direct offering. I think a dip is going to come. I think you're going to be able to scoop that up. We can read, actually, that this direct offering, which I do have pulled up right here, was for $7.65 per share, right? And it was a $23 million registered direct offering. But people do not care at all. This is very atypical. That doesn't usually happen. Usually when there's a direct offering, you see some pullback. Nobody got that opportunity. So this is absolutely crazy, right? And the strength of this chart is off the charts. Not to be corny at all, but that was really corny. Anyways, this is crazy. This stock is holding up insanely well, and I think there actually might be some upside left here, but I do want to caution you guys and give you the best possible entry points so that you're not getting screwed on this stock and you can make a pretty good profit. So what do the charts look like right now? Well, we had this 15 MA cross over the 200 EMA back on what would have been February 2nd. You can see the ticker symbol up here in the top left in case you're curious. This is OCGN. And it's been nothing but to the moon since, right? We have this gap that's been growing between the 15 MA and the 200 EMA ever since. I honestly anticipate some sort of pullback today. I mean, I could be completely wrong, but we're going to play this out a couple different ways just to see what the potentials are, even if it doesn't happen, right? So the strength of the chart, what really catches my eye is this is holding up extremely well. If we do a Fibonacci retracement, which tells you how much a stock gives back based on an initial run-up, right? So you put this at the base of the run-up to the peak of the run-up, run up using the candle wicks too, you can see that it only gave back at the most about 38.2%. A strong chart will retrace 50% or less. So a 38% retracement is absolutely crazy for this stock, especially considering how volatile it was, how much volume went into this, how unusual the trading pattern was on OCGN. My friends, this is insane. This is a crazy, crazy chart setup. I'm not guaranteeing you this is as little as it's going to drop, but it is in a clean upward moving channel. And we can actually predict a little bit based on the price action here. So keep in mind, the volatility of the stock is incredibly high, so this could change on a moment's notice. But obviously, we cannot keep this trajectory of growth forever. But we do have a recognized and respected ascending level of support. We always look for 3 different touch points to recognize a level of support or resistance, and we get that. We got 1, 2, 3, 4, 5 different touch points here. And in order for us to break out of this upward moving channel, this ascending level of support, we need a wide range candle bar to break beneath this ascending level of support. And that is going to be something like this, right? Doesn't necessarily need to be that big, but you're not looking at a candle break like this, right? You're not looking for something that goes like that, just dips its toes underneath, right? You want something that breaks it hard, and you're going to know because it'll be a wide range candle just like this. It'll go like that. That is going to signify to me that you've broken that ascending level of support and you're likely to begin a little bit of a sell-off, which isn't bad. It isn't bad, right? We've grown a lot. To have some sort of retracement is expected, but we're going to prepare you guys for all the possible scenarios just by the off chance that this does happen or doesn't happen. So what we can see right now is we have this ascending level of support and we have a secondary level of support sitting right about here. So if we do break this ascending level of support, we know that we've got this level right here at about $13.95 as a secondary fallback position for the stock to hold onto. So it's really not a large difference between this ascending level of support and here. By market open it is, right? But as of now, that's not a huge difference in discrepancy, right? For support levels and entry points. What I think is going to end up being the best possible entry here, if we draw out the Fibonacci retracement one more time at the base of the run-up to the peak of the run-up, you can see, as I said, 38.2% retracement, right? We held pretty well, and right now we're hovering just below the 23.6. If this ends up being a red day, which it very well might, we're down here in the pre-market compared to where we closed, but if it does, I find it extremely likely that it'll pull back to about the 38.2% retracement. That is if it's a red day, right? It very well may be another green day. And if it is, right, what's going to be a good entry point for you to swing this stock? Well, I find it likely that it is probably not going to be able to keep this rate of growth forever, right? Where it's this kind of volume and volatility can't last for an extended period of time. That's unlikely. You are likely to see a pullback, and I think it is likely going to come down to about here at $13.90. I think that is a very safe entry point into the stock just based on what we've seen. But if it does break below that, we know that we have that 38.2% retracement at $12.89. Now, what if it breaks beneath that, right? What are you going to be looking at? And guys, you're going to be able to know whether or not to get into the stock based on the price action. You'll see a bounce, right? So here you can see a bounce. I'd rather this was a green candle, but nonetheless, I'll show you a good example. So let's say hypothetically that the stock breaks beneath this ascending level of support and it bounces down here, right? It tests out this level of support. Well, if it kind of just, tiptoes around it, you see a small candle bar, right? A small range candle bar that comes back up, followed by another one that immediately comes back down. You're probably going to see it break beneath. But if you see, a bounce here, instead, what that's going to look like is a wide range candle bar. You're going to get something like this, a wide range candle bar that'll bounce off that level of support. You don't want to be tiptoeing around that support line because if you are, the odds of you breaking it are pretty high. So if you get a small range candle bar like something like this, it just kind of tiptoes around that, goes up a little bit, then comes back down to retest. Most likely you are going to break beneath, right? Typically that's how it works. Unless you get 3 attempts at a level of support, 3 attempts at that point, you're most likely going to break if you see, 3 fake bounces. So then the next level is going to be down at $12.89. And if it does the same thing as $12.89, it kind of tiptoes around it, right? You see a little bounce up, little bounce down. It's probably going to come back down to about $9. Now that's a pretty harsh sell-off. And if we drop a Fibonacci retracement, you're going to be looking at right around 61.8%. I honestly don't find that very likely. I find that pretty unlikely, especially because think about the overall sentiment of the stock, right? People got into this regardless of the direct offering. So there's a lot of investors out there that see some potential in this company. And the fact that it has not sold off that much yet indicates to me people are still holding this stock. And we can see that is verified by the volume. We've got a lot of volume right here, right? You can see all this green volume, all these green bars. you can see how the green volume here is not really matched by red volume, right? We can see in a 1 hour time frame, 191 million shares, 113 million shares, 150 million shares, right? And then it's not backed up. So my opinion and what we're seeing here on the charts is that people are still holding this stock. This is likely an investor stock, not so much a trader stock. And I find it very unlikely that you're going to see it tank hard. I think it will pull back, right? You're going to have people that take profits, but I think somewhere between $12.89 and $13.89 is the most likely entry point into this company if you are looking to do so. And then what is a good exit point, right? Well, you're going to be looking at a retest of about $12.87. And honestly, my friends, if you get in just under 13 bucks and you get up to even like $17, right? You're looking at a pretty good return. $4 a share, depending on how many shares you buy, could be a pretty solid return on your investment. I don't know what that comes out to. I'm not great at math, but 15, 20, 25% in a day, you cannot complain with that at all. I'm telling you what, nickel and dime over time, you're going to build out your portfolio into something absolutely nasty. If you get an 8, 10% returns on your entire portfolio, right? You double your count. If you get a 10% return on your portfolio 12 times, you triple your count, right? So compounding effect, it adds up over time. Nickel and dime in the market, my friends, are going to do very well. So to reiterate, a good entry point of this, in my opinion, is going to be $12.89. And then, we might see it hold here at $13.89. I find it more likely you're going to see it pull back to $12.89 personally, right? But if it doesn't, either of these entry points is going to treat you well. If you end up buying in just under 14 bucks and it pulls back to $12.89, I think you're going to do okay if you average down, meet somewhere in the middle in terms of your dollar cost average. You're not going to be hurting. You'll do just fine. I see a lot of upside here, especially if the vaccine that they're working on is utilizable in the country. My friends, oh my God, you will probably see the stock double or triple again. And that sounds crazy, but that's a big deal. That is a huge, huge deal. And that is what the charts look like right now. So coming over here to the 1 day, 1 minute chart for any last minute things we can see. You saw the price action was absolutely insane. I'm just going to clear out the charts. You can rewind the video if you want to see any of the stuff that we just talked about. But we had a very clean upward moving channel, right? A break with a wide range candle bar down here, right? Saw it sell off a little bit, followed by a nice little rebound back in. I like this right here. This is a nice bounce example, right? You get this engulfing candlestick pattern indicating that we do have a nice even trend reversal. And then some nice consolidation leading into the rest of the day. Here in the pre-market, right, we are seeing some more buying pressure. We're actually a little bit higher than we closed in the extended market hours, which is why I also believe you are likely to see, a nice little run here. And we do have the 15 MA trading over the 200 EMA to give double confirmation that this stock is, in fact, still in bullish territory. So that is what I have for the video today, guys. If you enjoyed it, please drop a like. It really does help support the channel. And consider subscribing if you'd like to see more content like this. Lastly, I have an affiliate link in the description box down below for Webull, which is the platform you're watching me use right now. This is version 4 for the desktop. If you use my link, you get 2 free stocks with a $100 deposit. I'll receive a free stock. Great way to support the channel. And if you're not interested, my friends, that's totally fine. I just appreciate your support by taking the time to watch my videos. So that is what I have for you guys today. Thank you for watching, my friends, and I'll see you all next time. Peace.